Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Irmen.
Hello and welcome back to the podcast. Thank you very much for being here. I appreciate you. And I appreciate you if you are sharing this, if you are giving me 5-star reviews. Thank you, thank you, thank you. That is what helps everybody else find the podcast. And believe you me, right? People need this information and they're looking for this information. So the higher we rank, the better it is. If you want to just go into your app, give me 5 stars if you have not already. All right, so today we are going to talk about taxes and the life insurance. What is tax deductible? What can I write off? All that good stuff. Before I even get into this, I am going to clarify, I am not an accountant. You are going to want to talk to your accountant about this. Now, with that being said, not every accountant is going to have the same answer. My accountant says if you take a loan and it is for business purposes, yes, you can write the interest of that loan off as an expense. So if I have $1,000 worth of interest expense because I bought cows, I bought farm supplies, I bought inputs or equipment or whatever. If you can prove that that's what you bought with it and you have a receipt to staple to your statement, then yes, you can write that off. Now, a couple weeks ago, I had a farm business management teacher, instructor, whatever, on, and he said, Mary Jo, there's no way that's going to hold up in an audit. You cannot deduct that because what I have been told by numerous accountants that teach infinite banking is that if you take a loan from the policy and you do an amortization schedule, you clip your receipt to the amortization schedule. And that amortization schedule is showing how much interest you've paid through that year, right? The insurance company does not send you an interest statement. They are not in the business of banking. They are in the business of life insurance. We are using them as a bank. He said, no way is that going to hold up in an audit. My accountant says it will. My accountant was an auditor for 30 years with the IRS. Who is right? I don't know. You have to do what's comfortable for you. A week later, I talked to a new client. He has been using his life insurance for many years. His policies were like 20 years old. And he has been writing off the interest as an expense for farming. And he's been audited 3+ times, and it has held up every single time. He too said depends on who the auditor is. If they want to be a jackwagon, then guess what? It may not hold up. So is the interest on a loan deductible as an expense if it's used for business purposes or for farm purposes? I'm going to say yes, because that's what my accountant says. Ask your accountant. Do what is going to be most comfortable for you, right? And that you're going to be able to sleep at night over. I am not scared of an audit. Do I want an audit? No. Am I scared of an audit? No, because I have an accountant in my corner. I deduct what I can deduct. That's just how I am. Do I have a gray line? No, not necessarily, because my accountant will say, Mary Jo, we can't justify that. Or no, that's not going to hold up, right? If I can't justify it to him, who was an auditor, I'm not going to take that deduction. I'm not the person that pushes the line to the very limit. Worst case scenario, though, if you do, you have to pay some money back. Like, be prepared for that if you would get audited. The other question about taxes is the premium going to be tax deductible? And I know I've talked about this on other podcasts. Your premium is not an expense. You cannot deduct that as a business expense. I don't care what your premium is. If you deduct it as an expense, there's going to be taxes on the gains of the death benefit. So no, the premium is not an expense. Now, some people who have corporations, if you are paying the premium through the corporation, it's going to be a distribution to you. Okay? So it's going to flow back up to you as a distribution on your taxes, which are that distribution, income from a corporation distribution is only subject to federal and state. So you save 14%. Now, this is all S-Corp stuff. This is the stuff that I know because this is how I do it and what I've learned. Again, talk to your accountant. If I write a check for my premium out of my business account, it gets coded as a distribution. I could bonus myself the premium amount as payroll, but then I'm taking it as payroll, which is federal, state, Social Security, and Medicare. So I would rather take it as a distribution. So if you want to expense it on the business side, it has to be payroll to you. But then you're going to claim it as income on the personal side. So you really have to think about, a lot of times if you're an LLC, it all just flows up to you anyway. So which way is going to be best? Even if you try to expense it, now you took it as payroll. If you take it as a distribution, it's probably going to be better. Other questions on taxes. I cannot think of anything else that would be questionable on taxes. Just make sure if you are borrowing money, you are borrowing that money for something that is business or farm related so that you are able to write off any interest. Oh, here's another question we get a lot. What if I pay myself back extra? So let's say the insurance company is charging you 5% and you pay it back at 10%. The other 5% does not go in as a loan repayment, right? But Mary Jo lent money to Farming Without the Bank, and I lent it at 5% or 10%. 5% is what I have to pay to the life insurance company. So Farming Without the Bank gets to write off 10% as an expense. 5% goes to the insurance company. The other 5% comes to me as interest income. I claim that on my taxes as income. If I wrote 10% off as an expense on Farming Without the Bank, Mary Jo has to claim 5% of interest income on the personal side. The other 5% I don't have to claim because it's a write-off or it's a charge from the insurance company. So if you are lending money to the business and going back and forth, anything above what the insurance company is charging you is interest income to you. So make sure that's all kosher with your accountant as well and that they understand what's going on. Outside of that, I'm not so sure there's a lot more to talk about with taxes as far as premium and loans go. The death benefit obviously is income tax free. It is not estate tax free. I do have another podcast, I'm pretty sure, on that. And so you can go back and listen to that podcast to get that information. But because it's tax time, everybody's wondering about this. Some insurance companies will send you the interest statement. Some will not. Some you will have to ask for the accounting. Keep in mind, you guys, we are making this for banking. That is not their number one concern. It is life insurance. So when it says you become your own banker, you are the banker. You're going to have to do the paperwork. You're going to have to be accountable. And that is going to come with time, right? You need to do your amortization schedule. You need to make sure the loan gets put in the books. This is your responsibility. You're paying the bank tons of money and interest to do this for you and manage it for you. This is shifting that responsibility over to you. The other questions that I've got related to the tax code is I've had like 4 or 5 people reach out to me and say, Mary Jo, there's a change in 7702. And so it's a tax code, 7702. What it relates to is the MEC line. So we can only put so much money in the policy before it becomes a modified endowment contract. If we put too much cash in, now the whole policy grows taxable. We set it up so it continues to grow income tax free. This rule will change where that line, I'm going to call it a line, where the policy will MEC. What does that look like? How does that affect the companies? I've had a lot of questions on that. We don't know yet. The companies don't know. I know other people that have done podcasts on this, and it's nothing but speculation. Here's the deal, guys. I cannot stand that stuff. If we don't know the answer, why are we talking about it? We can talk about what ifs all day long. What's the point? I want to know the answers. And so why am I not talking about it? Because it's a bunch of what ifs. We've talked to the company. Those people inside the company are still like, well, if this happens, then this. And we're not sure what we're going to do yet. And we're not sure what that's going to look like. And we don't know what the numbers are going to look like. Will something most likely change the end of 2020 or 2021 at some point? Yes, absolutely. We are going to have different policies going forward. Things are going to change with the structure of the policy. It looks like it's going to be better for us. What does that look like long term? If you give up something on one side and get it on the other, it's a give and take relationship in life insurance. It doesn't mean that everything's going to be absolutely better and fantastic and whatever. We're going to give something up to get something. And so what that looks like, I don't know. And so as soon as I know, I am absolutely thrilled to share that with you. But until then, I'm not going to do a whole podcast on speculations. So just be on the lookout for that and know that I'm not avoiding that subject or that I don't know what's going on or what have you. But I just don't want to have a bunch of misinformation out there that we then have to go back on. And why not just do it right the first time? That's my take on nearly everything that I do. Just do it right the first time, except paperwork. This is why I have amazing assistants, because I hate paperwork and I never do that right the first time. But on sharing information and spending money, I want to do that right the first time. Okay, if you guys have, that's all I have for you today. It's going to be a really short podcast, but questions that were imperative and brought up right away. The other one that I have gotten some questions on that I may as well just answer it here since I have a little bit of time is Mr. Talking Head did a video on IBC being a scam or something. I don't know. And people are like, well, are you going to address that? No, I'm not going to address that because the people that listen to me and listen to him know that he's great at teaching you how to get out of debt, but he's not great at teaching you how to run a business and create cash flow and how to grow a business and how to create wealth. And so I am not going to do a podcast talking and trying to convince people that he's wrong. When if you listen to any of my podcasts, if you listen to any other James Nethery, if you on Bank, I forget the name of his podcast, just type in James Nethery. If you listen to him, if you listen to Wealth Without Wall Street, dudes. If you're listening to any of these other podcasts, you know the truth about infinite banking. We're all out there spreading the truth with a unified message. When we have somebody come in with an ununified message and just talking crap and not having any idea what they're talking about and giving any specific details just because a caller called in, really, those people that are giving merit to that are not listening to my message. And so I am going to continue to spread information that is great information. Most of the information that was brought up is in podcasts. That's already there, or we'll continue to talk about it. Am I going to tear that particular video apart and what that person got wrong? No. Am I going to mention his name? No, because it's not worth my time. I have given you 2 minutes of my time talking about him, and that is it. That's it. That's all you get. No more. Because it's insane to me how we can put information out and not be educated about it. Drives me crazy. This is why we can't trust the internet, because half of what we see is misleading information and fake news. And he's fake news. Okay, my friends, that's all I got for you today. And keep your eyes open. Life Without the Bank, the new book, should be released next week. I know I have been talking about this forever. People that are listening to the podcast, Wealth Without the Bank or Wall Street has been rewritten to Life Without the Bank, shorter, more to the point, a little bit better. And so you cannot find that on my website. I've gotten rid of that book. I apologize for any confusion, but it is now Life Without the Bank. So be on the lookout for that. There is going to be an introductory price. I will not close that introductory price until you guys all hear the podcast and can get it at that price when the podcast and the book go out. So it's not like I'm going to do it for one day and close it all down. So be on the lookout. I think it's a much better book, but it would be awesome to have you guys read it and have you leave some reviews or email us reviews so that you can let us know. Otherwise, that's it. You have an absolutely fantastic day. I hope that while you're listening to this, and if you are in the South, that you are staying warm in your 30-degree sweatshirt weather as you're all bundled up. I get it. The electricity went off. Our electricity went off. I lost my mind over the whole thing because it's insane to me that in 2021, our electricity goes off so that we can provide more electricity to the grid and conserve energy. A whole nother topic. A whole nother topic that has nothing to do with infinite banking, but that's where I sit on it. Okay, all. You have a fantastic day, and we'll talk to you next week.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.